What's going on, everybody? Today we're going to be talking about how to simplify your trading. There's lots of different ways to do this, but let's talk about some of the benefits from simplifying your trading. Well, one of the biggest ones I think would be you could reduce your stress and anxiety. Lots of people talk about being stressed and anxious when they trade. If you simplify the process, this could make things easier for you. Reduce your risk and potential for loss. And by doing so, you can also increase your profits, potentially. Greater accuracy and precision in your trading. More efficient and effective use of your time. Improved mental focus and concentration. Greater peace of mind. Easier to learn and remember trading strategies. When you don't make it too complicated, it's going to be much easier to follow. And by doing all of this, you're going to have greater self-confidence and a security in your trading. So how do you simplify your trading? There's a few simple ways that you can do this. The first one is to limit your trading to a certain time frame. Often when I show things on this channel, I can show you examples on the daily, the 4-hour, the 1-hour, the 15-minute, all different kinds, but stick to one. Use one chart to identify a key area and take entry on a lower one and see how that works out for you. What you can also do is pick certain days of the week that you want to trade. You don't need to trade every day of the week. Maybe trading too much isn't for you. Maybe sitting at the screen every single day is not a good thing. That could also help lower the stress and anxiety if you're not doing as much chart time. Focus on a specific time of the day. So maybe you only want to trade during New York session, maybe another one, but pick one and stick to that. You don't have to keep running back and forth to the computer 24/7. Focus on a specific pair. If you end up watching too many pairs, what's going to end up happening is it could take a toll on your psychology. You could suffer several losses. The more complex that you make this, so adding more pairs into your strategy, the more likely you're going to face numerous losses. That may discourage you from continuing, or you may not trust your system at this point. So try to master one pair, and once you've done that and you know that it's not enough, or maybe it is, at that point you can decide to add another pair if needed. Focus on one strategy as well. So there's a few different methods I talk about when trading on this channel. You've heard me mention order blocks, voids, supply and demand, all different kinds. Now, the problem if you try to trade every single method that I share is it will be the same issue as if you added a bunch of different pairs and tried to trade them all. You may go through a run of several losses, and you might not be able to withstand that. And if you're trading for a prop firm, you're likely blowing your account because of this. Each one of these methods are great on their own, but when you add them all together, and if you have a week or two of bad trading off of everything, you're not going to be able to survive it. So stick with one strategy. If there's room for another one at that point, once you've mastered that one, you can try to add it and evaluate it closely and see if it works being added into it. If it doesn't, move it back out. Because when we're looking at this now, I want to show you something too when we're identifying stuff. Simple methods. I prefer a simple approach when looking at the market. So we look for areas where price may react, and then we're taking entry on a lower time frame. This is the daily chart, and you can see how price came into the area. It didn't decide to go any further. It closed, but it came in and tested the area. And at this point, I would have been looking for opportunities all the way down to here on a lower time frame. that would have been my bias. And again, you can see how it happened over here, where price came in, tested the area, but chose not to go. And at that point, I developed a bias that it's going to go down. My target would have been down here. That's where I would have been aiming until I seen something different. And this happens over and over again. So this is just the daily. Now, if we go take a look, show you here the 4 hour. It's the same thing. You can see areas where price came up, tested the area, and then went down. Now, you could have been aiming for down here, but the great thing about scalping is you don't need to try to hold on to a trade all the way down. Down to these areas. So you could have taken something easily out of this. And we'll take a look at 15-minute chart as an example as well. And you can see the same thing. So no matter what time frame you want to use, you can use all different kinds. You're marking areas where you expect price may react, and when you see some type of reaction, you drop down to the lower time frame, whichever one you choose, and look for an entry pattern and try to get in. And you don't need a long run. It can be a 1 to 2, a 1 to 3, 1 to 5, 1 to 10, whatever it is that you're aiming for. Everybody is different. Everybody manages their trades in a different way, but this is how you do it. There's nothing complicated. I think anybody looking at this can tell there's nothing complicated about this. It just takes practice. So what are some of the steps that you can take to simplify your trading? Well, set realistic goals. Don't try to trade everything, as we discussed earlier. When you set your trading goals, make sure that you're trading the right things. Use a trading plan. Having a trading plan will help you stay disciplined and make better trading decisions. So that will hold you accountable. What tips can I offer you to simplify your trading? Well, I would suggest TradingView. This is the chart that you're looking at right now. For years, I just used MetaTrader, and MetaTrader's fine if that's all you want to use. But what really transformed my trading is when I paid for the basic pro plan with TradingView. They have tools and features that makes it seem like MetaTrader on steroids. And it was just a game changer for me. And if you're interested in TradingView and signing up for that, or just you want the free version, I'll leave a link in the description and you can check it out. Another thing you should do is review your trades frequently. This will help identify things that you can improve upon. Make sure you have a solid understanding of how the market works before you start trading. I often recommend to people when you're just starting to learn about trading, go to babypips.com. They can give you a solid foundation. And once you have an understanding of how the market is, then you can start moving forward. Don't just jump into trading if you don't know anything about it. Learn the terminologies, learn the basics before you even start messing around with demo trading. To end this, I just want to say how you move forward will determine how things are going to work out for you. So those who claim they can do things and those who claim they can't are both usually right. So go easy on yourself. You'll get there. Just give it time. And until next time, bye for now.